start. Hello, everyone. Thank you for joining us today. Today we'll be talking about MiCA regulations. We have two amazing speakers. I'm super excited about today's webinar. So we have Maria Akulenko from CoinsPaid. She's head of compliance at CoinsPaid, and we have Claudia Naiba, who's head of compliance at Coinfirm. Just a brief intro about both of the companies. So CoinsPaid is a crypto payment provider, if I'm correct, right? And Coinfirm is a blockchain analytics company. We're gonna talk about overall, MiCA overview. We're gonna talk about TFR and GDPR alongside MiCA regulations, and we're gonna hear from Maria about her experience and CoinsPaid kind of journey when it comes to this updating and ever-changing regulation landscapes. Just before we start, we have a small disclaimer. So this discussion is not legal advice, it's not a financial advice. It's just a discussion of people who are passionate about crypto regulations. Okay, I'm just gonna give the floor to first Maria, then Claudia, just to introduce yourselves, and we're gonna jump in.
Thank you for such a nice intro. Yes, indeed, I'm head of compliance and legal at CoinsPaid. We are one of the leading crypto processing providers. And my experience as compliance professional has been attested by international certifications, etc. However, the last 2 years has been a great learning and experience for me, despite all previous years of experience, because the regulators worldwide and especially in Europe has prepared lots of new things and pieces that nowadays we need to incorporate in our business and to be adhered to stay in the business.
Claudia?
Thank you so much. Maria, that is a wonderful intro. Thank you so much for presenting yourself. Hello, everyone. Very nice to meet you. My name is Claudia Naiba. I represent Coinfirm, Coinfirm's regulatory affairs team. A bit about my background. I have over 10 years experience in anti-fraud as well as AML compliance, both in the fiat and the crypto industries. Previous to working with Coinfirm, I've worked with a financial intelligence unit, and I could say that that experience has shed some new light on regulations, on how they are applied, the level to which they are applied, and also to the extent to which the obliged entities apply those regulatory obligations. As part of Coinfirm, I've seen that this experience, not just with the financial intelligence unit, but overall, has been quite interesting because it allows me to assist the product team to develop tools that can be used for a wide range of activities. And as Maria said, the regulations nowadays tend to be a bit hectic, especially in light of FTX's collapse and its reverberating consequences, internationally speaking. We've seen that regulators are facing more and more stress from external parties to impose regulations, to have investors protected, and anyone who is interested in cryptocurrencies, basically. So I will just stop here, and we can dive into our main topics today, which would be MiCA, TFR, as well as how GDPR actually intertwines with this too. Maria, before we go ahead, do you want to add something?
I think no, everything is clear, and let's continue with discussing these fascinating intermingled topics of legal regulations. Indeed.
So I would say that when it comes to MiCA, TFR, perspectives that and interesting regulations that the European Union has issued. especially when it comes to MiCA, internationally speaking, from my anywhere. Basically, when you go through all of its pages, you can understand why. It is detailed. It is providing a lot of information on new standards that have not been seen anywhere. So just for the wider public here to have an understanding of what exactly is MiCA, what is the scope of this regulation. Primarily is to protect crypto asset investors and to ensure the trustworthiness of the crypto assets market framework. It lays down specific rules for offerers, persons seeking admissions to trading, as well as issuers of crypto assets. Now, when this regulation actually applies to both natural and legal persons, including certain undertakings providing crypto asset services. Now, what is actually out of scope for MiCA is fully decentralized crypto asset services, so those DeFi services. Now, DeFi services is an entirely different topic that we have actually dedicated a webinar for this specific topic. So I'm not going to go into details why this is out of scope for MiCA. Now, when it comes to how MiCA achieves all of these goals, would be by first and foremost requiring issuers of asset reference tokens to have a registered office in the union. Secondly, all such providers are required to issue white papers in order to protect retail holders, offerers, as well as persons seeking admission to trading of certain crypto assets. They must create and publish a crypto asset white paper containing mandatory disclosures. Now, the white paper should also provide information on the issuer, project details, rights, obligations, underlying technology, and other related risks. In a different light, when it comes to such disclosures, we also have marketing communications, which should align with the white paper to ensure fairness and clarity. Now, MiCA actually offers some exemptions when it comes to this white paper and marketing communications to certain issuers. We're not going to go into detail here because we have about 20 minutes left to discuss all of these topics. So this discussion, just to mention right now, is going to be at a general level because there would be I don't think we would ever finish talking about MiCA, especially if we take into consideration TFR and GDPR. Another way of MiCA achieving its goals is to regulate crypto assets that are not already regulated under existing union financial services legislation. Now, when it comes to digital assets that are excluded from the regulations, we can enumerate certain types of crypto assets qualifying as financial instruments, deposits, securitization positions, social security schemes, pensions, insurance contracts, and funds. And with funds, we have to say with the exception of e-money tokens, as they are not considered deposits and are not excluded from the scope of this regulation. Also out of scope for MiCA is CBDC, so digital assets issued by central banks and also by other public authorities, as well as any related services provided by these in their monetary authority capacity. Also out of scope are non-digital assets that are non-transferable to other holders, such as loyalty points or redeemable only with the issuer, and digital assets that are non-fungible. And lastly, we have digital assets that are offered for free or that are automatically created as a reward for the maintenance of a distributed ledger or the validation of transactions in the context of a consensus mechanism. Now, having said all that, what actually does cover MiCA? What digital assets fall under MiCA? MiCA classifies crypto assets into 3 types based on their value stabilization mechanism. And here we enumerate e-money tokens, which are similar to electronic money, aiming to stabilize their value by referencing one official currency. The second type would be asset reference tokens, which are backed by other values or rights. And the third type is any other crypto asset, including utility tokens. When it comes to the transfer of funds regulation, just an overview. Recent changes in FATF standards introduced in June 2019 extended obligations to virtual asset service providers, requiring them to provide information on originators and beneficiaries of virtual asset transfers to facilitate traceability and comply with anti-money laundering measures. When it comes to GDPR, the scope of this regulation is to protect the fundamental rights and freedoms of individuals with regard to the processing of their personal data. Now, this applies to the processing of personal data by data controllers and data processors within the EU, and also to the processing of such data of EU residents by controllers and processors outside of the EU, where the data processing activities are related to offering goods or services to EU residents or monitoring their behavior. Now, the GDPR covers a wide range of activities involving personal data and sets out rules and obligations for organizations handling such data to ensure its lawful and responsible processing. Now, I'm sure that everyone here in the audience has some knowledge from basic to advanced regarding all of these regulations. Now, and as going through the TFR as well as MiCA, you might have seen that they both reference GDPR. I would like to ask Maria, what is your take on EU issuing the MiCA and the TFR? How do you see them lining up? And also, what is the how do you see the GDPR affecting the proper implementation of MiCA regulations and as well as TFR?
Well, MiCA, despite being very coherent and very massive documents in essence, it covers lots of issues. However, it addresses questions of money laundering on a very limited scope. It mostly relies on the MLD directives and basically the regulation on information accompanying transfer funds, or TFR, which was reviewed and updated shortly with the MiCA adoption, covers and aims on prevention of money laundering by establishing rules for the transfer of funds, especially in crypto. All these 3 acts are highly interacted and they rely on one another. In some points, it's very on high level. We will still need second and third level legislation and views of the national legislators in all member states on how to address certain rules, and especially in terms of technical standards. This is currently a little bit of lacking, but luckily we still have time. The starting period when the industry players needs to comply starts from 2015 and ends far longer as for 2026 for MiCA. So I think the most important part and the place where all 3 legislative documents are connected the most, it's actually the travel rule compliance and the TFR, because the revision of this regulation made obvious that crypto asset service providers had to implement scanning pre-transactionally, because it was not very clear and different national regulators in different jurisdictions had various points on how to cover it. Another important aspect, which is very impactful on the industry, is that there is no de minimis requirement for the European companies on applying transfer of funds rules. It means that there is no minimum threshold. And I would also like to mention that there is no exceptions. So there is no standards of applying simplified methodology for example, other VASP located as well within the European Union. So the TFR aligns the European Union with all world standard developments, follows FAT recommendations, and the travel rule obligation for European crypto asset service providers are very clear. If I'm not mistaken, they will start to apply from January 2025. And it would definitely enhance transparency and security in crypto transactions throughout the region. By harmonizing the approach to virtual asset service providers with MiCA and this TFR review, the European Union, in my opinion, it took significant stride in fortifying its regulatory stance towards any malicious attacks, scammers and fraudsters, which are quite active in crypto space. It should be mentioned that all these requirements, both from MiCA and TFR, and of course GDPR, because when you have exchange of information, which is basically the TFR, it's obvious interconnects with the personal data, and this should be adequately addressed by the virtual asset service provider, because the unique attributes of virtual asset transactions where settlements happen quite instantly and are irreversible on the blockchain, it still gives a lot of nuances on how to treat this personal information of the user or of the recipient party or the beneficiary. So the virtual asset providers need to fine-tune and elaborate their software, their platforms to be compliant and create truly pre-transaction decision-making platform, which will provide quite secure and comprehensive methods of making transaction, in exchanging information on the recipient and beneficiary, on the sender, and it will help the whole industry to identify and halt high-risk activities before they are recorded on the blockchain. If we are speaking on more high level, I believe that benefits of these regulations, especially MiCA for the industry, are manifold, because what we currently see, and it has been even said during the commission by the European Commission, the European Parliament in the course of review of the documents and their approval, there are lots of concerns related to the overall credibility of the crypto sector, especially in the eyes of investors and consumers. Ordinary consumers might not be as good protected previously, but with this new pieces of legislation, and we now have guarantees on stablecoin issuance, white paper requirements, basically all those fantastic things that Claudia, you have mentioned, that MiCA brings us. I believe it will establish credibility for crypto sector, not only from the consumers and the regulators, but also in the eyes of more traditional partners. It will help to overcome many difficulties VASPs are currently facing, such as unease of passporting, because basically now you need to obtain license in each member state and the rules are very different. As the risk of fragmented regulatory landscape will be diminished, it will result in more standardized approach along the whole European Union, where the service provider can easily, I hope at least, easily passport its license from one jurisdiction to another, and the license holder will be sure that the standards and rules applied to him by different regulators would be the same. This possibility of passportizing, which MiCA introduced, will make it more convenient for business to operate all within the region. However, of course, I see where there are pieces and bits where things might go wrong the most, not only regarding the fact that DeFi has been not included in the scope because, well, it was quite difficult to agree on what is centralized and talks on what is decentralized in crypto assets and how to regulate it. It's something that we yet have to wait for. But even certain details on how supervisors will do, for example, with offering, if they feel that something is wrong with the initial token offering, what will be their reaction and what will be their actual implementing strategies of law enforcement procedures that they will use. As there is, it is like it. For example, in Estonia, as Estonia, as someone might know, they have this thing called e-residency. Nowadays, there are talks that this e-residency might become some sort of gateway for non-stable coins to enter the European market. And there could be, for example, some reputation risk for the country as a whole. There's that one fear a little and do something to prevent. We yet expect from the national regulator some actions or guidelines in this part.
That is sorry, no, what you mentioned about this last part regarding Estonia, I think that is quite interesting. Do you know of any measures that the legislators within the jurisdiction have taken to avoid such things happening, especially when it comes to stable coins, for example?
Well, to be honest, I have to say that Estonia has been one of the early adopters of virtual asset regulations. It has done, I would even say that nowadays Estonia is one step ahead even of MiCA, because its regulation goes back to 2017. Of course, initially it relied primarily on the anti-money laundering directive and was limited to AML and CFT issues. However, within the last years, and especially actually the last year, Estonia has introduced numerous regulations and numerous more strict activities on the virtual asset service providers operating not only within the country, but worldwide. To offer products in Estonia, you have to comply with the local regulations, which are very severe. They all even opened and revealed the problem of jurisdictional shopping even within the European Union. It's not a secret that many VASPs shifted their activities from Estonia to other countries like, for example, Lithuania or Czech Republic after the introduction of more severe regulation. But all of this helps us a lot because us as a virtual asset service provider, because Estonia at least takes responsibility and takes risks. We see that the government and the regulator is not afraid to address a complicated issue. Even after MiCA is adopted, to make it truly work, there should be an open dialogue between the national regulators and the industry players, because without it, the regulator will not be able to accumulate the knowledge of what's really going on, how the market operates, and what can be done to regulate it, because they of course, very contradictory and difficult to understand at a first glance. And only with this cooperation between the supervisory authorities and market participants, we can really make MiCA work and not to remain it only like on the paper, because I believe mutual dialogue here is just imperative. It will be a great exercise for all jurisdictions, but Estonia here is one step ahead. If you just study the legislation of member states, there are some countries that do not regulate crypto currently at all, or just want to limit it to only AML and CFT issues. So here, from the Estonian perspective, we see lots of interesting initiatives, and most important, the readiness for the open dialogue.
That is very good to hear, because the crypto asset market is quite a controversial one, and seeing jurisdictions to take appropriate measures and in a fast-paced manner, but also in an appropriate manner to ensure that the wider public is protected. And also when it comes to AML CFT protection, it's taken seriously, and there's actually steps taken to that level. Now, I just want to clarify that both in the TFR as well as in MiCA, it is mentioned that the EBA will provide some clarifications regarding certain aspects. So even if these two regulations have been issued, there are still some things that are quite mentioned at the general level, as you mentioned as well, Maria. So the EBA on those matters is required to offer clarifications in certain cases by end of December of this year, or even going forward in the next year as well. Also, the EBA has started some started working with the public to gain more knowledge regarding certain issues that they have to provide clarifications on. And the input on these working papers is welcomed. So if anyone from the public would like to give their input on those matters after reading the TFR and MiCA regulations, the EBA definitely welcomes the effort from external parties, because they are a regulator. They do not have hands-on experience as us here have. So input from third parties is very well received by them. So do not be afraid to give your input.
Well, actually at CoinsPaid, we are currently working on this feedback from the market for the European Banking Authority, especially because we really need guidelines from them on such aspects as factors to be considered when establishing business relationship and conducting transaction involving crypto assets. We are also willing to receive more details on criteria and methods for identifying and verifying the identity of the originator or beneficiary of a transaction, especially in terms of self-hosted addresses, because this is currently, I would say, one of the biggest challenges the industry is facing. And the guidelines will, I hope at least, emphasize the role of third-party reliance in this process. It will take into account the latest technological advancements, because otherwise it will just doesn't work in the industry.
True, that is true. Also, I have to mention, we cannot end this webinar without mentioning this. In June, the FATF has issued virtual assets update for the targeted update on implementation of the FATF standards on VA and VASP guidelines. And in this report, they do mention that when it comes to the travel rule, there is no one single provider on the market that currently fully complies with their requirements for travel rule. So I would say that we have this TFR mentioning that certain aspects, certain details regarding the both the payer and the payee, for example, required to gather information on them. But how do you transfer them if those software providers do not comply fully with the travel rule? And then there's this sanctioning part where that certain third parties are saying that should be applied when when appropriate measures are not applied, meaning that the software provider for the travel rule implementation does not offer everything that is consistent with the FATF's requirements. And the TFR also mentions that information about the person behind a self-hosted wallet must be identified. So I would say that this would be the major issue here with the TFR and the travel rule implementation. And DBA, I believe, must provide some clarification on this as well. It is mentioned in the regulation. Okay.
I wanted to ask a question, Maria. This one is for you. You've mentioned a bit of what CoinsPaid is doing at the moment. Like, can you share like any challenges? What is your kind of journey at the moment when it comes to implementing these regulations?
Well, thankfully there is still some time. We have to be compliant only starting from 2025 with TFR and MiCA. It's basically certain point in 2026. But yeah, I wouldn't urge other compliance departments in other virtual asset providers not to lose any minute, because we have been actively communicating with the Parliament and Commission, even on the adoption stage. We've been engaging in consultations, providing feedback, and actively thinking on how we might be compliant, how to make it really work, not only on the paper or in our policies, but to actually make it live. We have a very robust roadmap for implementation of both MiCA and the TFR requirements. To be honest, it requires significant resources in terms of time, money, and personnel. So I'm really happy that we have already launched this process. Of course, we are still flexible because we are waiting for the final shape of the regulatory framework in Estonia on how to exactly do things. Currently, we mostly operate based on drafts of what we already have and our educated guesses at some extent. However, the starting point was just to assess all these massive requirements, to evaluate our current product, and to draft on how the product should look like in order to be compliant. We outlined the steps that we need to take, of course, to comply with this all robust regulations. And I have to say that includes not only some developing of the product or just integrating some other vendor or technical solution, but lots of changes have had to be done and are currently undergoing in our operational procedures and risk management practices. I'm truly grateful for the Estonian regulator, because they are actively responding and provide guidance on our questions and the best way to comply and make things really work.
All right, thank you. Right, so we have a couple of questions from the audience, and the first one is from James. So he's asking, is MiCA applicable to any platform with EU customers or only to those with operations in EU?
So if you think about it, MiCA is a regulation that applies at the EU level. And you have to consider the fact that all the information that is identified in the process of applying MiCA, you have to think about it in the context of GDPR. So when MiCA is when you look at such entities that require to be compliant with MiCA, you have to look at where the user base is from. If the user base is from a EU country, then you have to apply GDPR measures for them. But also, MiCA regulations require that the virtual asset service providers that would like to offer certain tokens that fall within the scope of MiCA to the EU market, then they would have to have a registered presence in one of the EU countries. So yes, I would say that irrespective if the users are from the, so if the users are from a EU country, the entity, if it's not from EU, from a EU country, and if it's from a different jurisdiction, as long as they want to have a presence on the EU market, they have to be compliant with MiCA.
Yes, indeed. I have to say that during the draft of MiCA, this question was really hardly debatable and negotiable because there were various views, but at the end of the day, crypto asset service providers outside the European Union, but serving European Union customers still have to adhere to MiCA to offer services. And this is really good for the market because we as an industry player, we just were afraid of, for example, that it would be easier for a business to register somewhere in Asia or in Latin America and offer services within European Union without any kind of registration and no need to follow up this extensive MiCA regulation. It would just benefit for the unfair competition, and it will not benefit the consumer, because the consumers within the European Union would still be unprotected in such scenario. And the fact that the regulation extends its reach beyond only European Union registers with CASPs really gives a consistent level of protection. It is harmonized with GDPR and the regulatory framework we currently have within the European Union.
Thank you.
And actually, I believe that it will trigger that MiCA would be used as a standard globally within other jurisdictions as well, because it's a robust legislation and many companies will have to follow its rules.
Plus, we have to mention that it actually does ensure that anyone delving into crypto assets will be protected. So also regarding the, I think this ties very well with the second question. What do you expect about economic impact of MiCA? EU will be a single market with 400+ million wealthy users. Well, I would say that is correct, because if you think about it like this, at Coinfirm, after the FTX collapsed, we've seen a migration from users that are actually using centralized exchanges, where they would have to undergo this KYC process and all that. We've seen a migration of the majority of the users from this type of services to DeFi services, because they had lost confidence in those type of activities, because the FTX was considered a robust company. There was no adverse media about it anywhere on the internet until this entire situation just came out of nowhere and still has reverberating consequences. I would say that the economic impact of MiCA would be a positive one, because it reinforces the trustworthiness of this sector, and it allows users to still perform all sorts of transactional activities in the crypto sphere without having the fear of without having the fear of losing their assets. Indeed, DeFi services offers some reassurance that your assets will not be lost, because all the responsibility is put onto the user. The user is responsible for their private key, for their assets, for their entire transactional activity, and so on. So the user is entirely responsible for that. However, centralized exchanges, for example, and other types of entities that would offer such services that do not fall under the decentralized definition, would have to gain something from this, because they would if they do respect the MiCA regulation, if they do issue those white papers and the marketing documentation, then, and they by the way, these two should be published on their websites for everyone to see. So everyone who would like to see what exactly they are offering in detail and where they are performing marketing and so on, this ensures a level of trustworthiness that you don't see with DeFis, for example. And we also know that the DeFis are quite prone to hacking, especially from nowadays. In recent months, North Korean hackers have started targeting DeFi services quite a lot. And DeFi services are easy to target because the code that they rely on sometimes has bugs. And if it's a truly decentralized service, then there is absolutely no developer to perform upgrades. And if the code has had a bug from the beginning, then that DeFi service is prone to being hacked no matter what. So in that case, your funds are still not necessarily that protected, because DeFi services at this moment are the ones that would have that are the most risk adverse to being hacked. So the economic impact of MiCA would be a positive one. I do have high hopes for how entities within the EU will develop after MiCA is implemented.
Well, I agree with Claudia. It's quite different things to buy Bitcoin with a credit card, which is like a mainstream, but to handle staking mechanism in DeFi or even exchange one crypto asset to another with some bridge, it's completely another story. And I don't think that there will be a significant spike in this sphere, except for organic growth and learning. MiCA would definitely influence more traditional minded peoples. What we have seen and what we rely on, and by the way, it's not only into crypto, we see a lot new emerging innovations in the payment sector, even in traditional finance. People become more and more pro-digital than pro-traditional banking. However, consumers still show a preference for well-regulated and licensed companies when it comes to handling their money. The trust factor is significant here. You want to know that your funds are protected. You want to know that you can easily access these funds. And you want, as a consumer, to understand that if something goes wrong with this institution, you will receive your money back regardless of anything. So this is why actually that we see the rise of stablecoins usage. It's gaining popularity because people are assured that they can easily convert them back into bank money or cash if they change their mind and don't want to play with crypto anymore. So, of course, in terms of bringing credibility to the crypto sector, MiCA is a keystone here.
I fully agree with everything you said. And I would also like to add, as a reply to this question, yes, MiCA is currently dedicated to EU countries, and for entities that would like to provide their services within the EU for the EU market. But think about it like this: the blockchain, the crypto asset framework in general offers no fees, basically, for transactions for intermediaries, for example, as the traditional banking system does. It allows populations from less developed countries to have access to the financial system. And I think that MiCA having this robust framework that entities would have to abide by, I think it could be implemented by other jurisdictions following its example in order to develop their own economies in these low developed economic countries. So it's not, if you look at it as an impact not immediate and only in the EU, but at an international scale, and correlated with the benefits of blockchain transactions, I think MiCA is actually good to mention MiCA as being the standard here. Because it's not just revolutionary for the EU market, but also internationally speaking.
All right, and okay, we have one last question, and we'll have to wrap up. So okay, maybe I'm not sure what does it mean. Are the passive service still possible? Does it make sense? Passive service.
Was this in relation to the first question that we had?
I think yes. I think it means like whether you still can offer services without like active advertising. Is this what has been meant when like EU? Yeah, yes, when EU users come organically. Thankfully, MiCA is quite clear on that. You cannot serve European Union consumers regardless of the channel they came to your platform, if you still have to adhere to MiCA regulations to be able to offer the services to them.
Got it. Thank you. All right. Yeah. Well, we kind of we even extended a bit our time. So yeah, if you have any kind of closing thoughts, closing remarks.
Well, I would say that I am very curious to see what clarifications the European banking authorities will come up with to provide better insights into the applicability of both MiCA and TFR. Currently, as they are good enough, but some clarification is still needed. So I'm really curious about that.
Well, yes, actually, I think that in upcoming months or like half a year, we will see more and more regulatory guidelines, explanations, side notes, and even, I believe, directives and regulations. Because what we currently have is like it's unparalleled move by the European Union in establishing a very comprehensive regulatory framework that applies to crypto assets, starting from ML CFT and ending by technical standards. So with the development of this initiative, which has no equivalent globally, we will see more and more rules to comply in order to promote the industry. Because the more clear the rules are, it's better for the industry. If you know how to operate, you can easily adhere to it.
Indeed, I fully agree with that. And just to wrap up with something crucial that Maria mentioned earlier, do not waste time to start implementing these regulations. It takes a lot of time. It takes a lot of human power as well as monetary value to implement them correctly. And currently, these regulations do not necessarily specify any repercussions to not having these regulations properly implemented, but they will come. There is mention and discussions that this is necessary to have them applied properly. Also, in light of FATF's last report, they performed a verification of jurisdictions that have started regulating the crypto asset market from an AML perspective. And 2/3 of the verified countries still have not taken any steps or have done very little to do so. And in my communication with the FATF and also stemming from this report, they have mentioned that more stringent consequences will come for those countries if they do not take steps to properly do so. So definitely, I again do not waste any time to apply these regulations, because the regulators are starting to become more fierce and adamant in the importance of applying these regulations as soon as possible and as proficiently as possible.
All right. Thank you so much, Claudia, Maria. It was a fascinating discussion. Thanks for your input. Thanks to everyone who joined us. And yeah, we'll see you next time.
Thank you so much for your attention. Maria, thank you so much for your presence. Bye.
Thank you. It was a pleasure to share floor with you. And thank you, audience, for listening to us.
Indeed. Thank you so much. Have a good day.
Have a good day. Thank you. Bye-bye.
Good day. Bye.